Microsoft teams up with Meta, the SEC wages war against the Bored Ape Yacht Club, and stick around to the end if you want to know how many more Americans are invested in crypto despite us being in a bear market. My name is Brian, and this is your nightly crypto news wrap-up. Let's get it. Welcome to BitBoy Crypto, the people's channel, home of the BitSquad, the largest and greatest crypto community in all the interwebs. The world has changed in so many ways over the last 3 years, and because of that, working from home has become increasingly more common. Not only are major corporations noticing the different trends in work patterns, they're also anticipating how the next generation will choose to communicate. These are some of the reasons why Microsoft has decided to team up with Meta to bring virtual reality and the metaverse to the workplace. Microsoft has already been dominating the work from home movement with their platform Microsoft Teams, which has grown by 270 million users in the past few years. With that many people starting to work from home, it makes complete sense for them to double down and team up with Meta to incorporate their VR headset. That way you could be in the office and at home. In their press release yesterday, Microsoft stated that Work Trend Index data shows that 50% on Gen Z and millennials envision doing some of their work in the metaverse in the next 2 years. Thanks to this partnership, everything from Microsoft Teams, Windows operating system, cloud gaming for Xbox, and Microsoft 365 apps, including Excel, Word, PowerPoint, and Outlook, will all be available on MetaQuest headsets. That's a lot. With more and more options that make working from home viable and productive, it will be interesting to see the data on if people would prefer a VR headset compared to just using a laptop. Lastly, as big of a story as this is, they need to incorporate a crypto coin for all Quest transactions if they want to break the internet. But I digress. Let's pass it to Frankie Candles for a market watch.
Thanks, Brian. All right, guys, let's jump in and do a little market watch here. We've got Bitcoin coming in at $19,157, up about 0.5% on the day. Ethereum coming in at $12.94, up about 1% on the day. Now, guys, I want to bring you over to the Bitcoin chart because we are getting a very bearish signal. Now, I do want to preface this with tomorrow we do have the CPI data coming out, and I do believe this is going to be the thing that is going to give us that big volatile move in either direction. There is a lot of confusion on the charts. I'm probably not the first person to tell you guys this, but we did print this yellow X on the 4-hour time frame. Now, although the higher time frames are showing momentum moving to the upside, putting in some bullish divergences on some time frames like the weekly, that 4-day yellow X does have me a little bit worried. Typically, these are very, very bearish signs, and as we are printing this red dot with this yellow X, we've also started to print a red dot on the 3-day, which would be more bearish, and then the 5 and the 6-day, as well as the weekly, do have those VWAPs flopping back over to the downside, showing that the buyers might not be that strong right now, but you do want to remember that we are sitting at pretty strong support. So, guys, it's mixed signals galore out there, but again, tomorrow's CPI news will be that thing, in my opinion, that I think will give us that deciding factor. Are we going to get a decent move to the upside, or are we going to get a big dump down and finally break that support? If you guys want to look more into the charts and get more detailed explanations of what I'm looking at, you could follow me at Frankie Candles on YouTube or Frankie_Candles on all socials. Back to the news.
Thanks, Frank. Although there's still a lack of transparent rules and guidelines for crypto and NFTs, and although there's no precedent for them to go off of, the SEC continues to mindlessly enforce by regulation, and their favorite tactic is to go after the projects that are the most popular. While the outcome of XRP still hangs in the balance, the SEC has now decided to go after the creators of the Bored Ape Yacht Club, Yuga Labs. Despite the SEC refusing to comment on the matter, they're obviously targeting the Yacht Club and ApeCoin for being unregistered securities. Yikes. According to the Bloomberg article on the matter, it's just a probe right now. And a probe doesn't mean the SEC will officially open a lawsuit, but given their track record, my best guess is that they will. This is what they do, and this is how they put their boot firmly on the neck of the industry. Understand that the case against XRP isn't just against XRP, because if they win that case, they can use the outcome as precedent against everyone else. That's why going after Yuga Labs is an obvious card for them to play, because if they win against Bored Ape Yacht Club, then those rules can be applied to every other NFT project. Gensler would rather use a 1940 Supreme Court ruling to regulate by enforcement instead of waiting for proper rules and regulations to be given to this new innovative space. The game has changed a lot since 1940, and they should make the rules crystal clear before being allowed to sue everyone in sight. A year ago today, we were a month away from record-setting all-time highs for all of crypto. 1 year later, we're in the depths of a bear market, praying we don't lose the support levels from the June low. Despite all the fear and stress of being in a bear market, people haven't forgotten the life-changing potential the game of crypto has to offer. Regardless of the tumultuous price action, more and more Americans have decided to take a chance on crypto. This article from finbold.com points out that as of this summer, 18% of Americans are invested in crypto assets. That's a 125% jump up from the 8% who were in crypto back in 2020. As this number continues to rise, it motivates me to keep grinding, because it's clear and obvious that retail, banks, and institutions alike all see the silver lining in crypto. In the next few years, the asset class will be even more popular, more accessible, and hopefully the regulation is sorted out by then too. Don't let anyone tell you you're getting into crypto too soon if you're getting in now. The statistical jump is bullish, but still, only 18% of Americans are invested in crypto? So, imagine the price action and what it will be when that number is 50 or 60%. That's all I got. Brian out.